Hey everybody, how are you this day, this evening, this morning, wherever you are, whatever your time zone? Welcome to the Thursday Financial Thing live stream. I stopped calling it the Financial Thing peer-to-peer lending live stream because don't just purely cover peer-to-peer lending anymore. Cover everything now. Come for the peer-to-peer, as they say, and stay for the education or whatever you want to learn about or discuss. We have a lot to talk about today, this evening. I'm going to try to make this a relatively quick one, although I say that every week and that never happens. But a quick weather update is a very balmy, I think 30 degrees centigrade here in Orlando, Florida. But we're going to talk about a little bit of peer-to-peer lending stuff. Take a quick look at the loan pad data feed. How do you say that? Data feed. We're going to talk about the stock market, what the heck is going on in the economy, some important things that I think are important to pay attention to and keep ahead of when it comes to finance, because these things do affect the kind of future predictions you can make on the stock market and also other types of investments and interest rates. So important things coming out in the last week in the news we'll highlight. We're going to talk about deodorant because I got an interesting email from the mailbag, and we're going to have a little bit of Bitcoin chitter chatter. Oh, and today, by the way, I think it's called National Elder Awareness Day. I don't know if that's a worldwide thing or if it's in the US, but bringing attention to the world of elderly people getting scammed by tricksters out there whose one mission in life is to remove elderly people from all of their assets. And we're going to talk about that too. So I'll show you some things that I've experienced in the scamming world directly, so maybe you'll have a good laugh about it, maybe not. Maybe this stuff hits close to home as it does for me, as I've had a family member who has been scammed out of a six-figure, yes, you heard that right, a six-figure sum of money from being scammed by an awful group of people that I have identified who they are. So since it is National Elderly Awareness Day or International, I don't know, we're going to talk about that too. Quick shout out to our sponsor, of course, of the stream, Cufflink, where you can earn up to a very juicy 10.25% gross per annum. I need to fix this graphic. It's still not correct. Over 330 million pounds of investments made since 2016. Zero investor losses to date. Capital is a risk. Please don't invest more than you're prepared to lose. This is not FSCS protected. It is an investment. You can lose money. Believe me, it can happen. Please check the latest rates on Cufflink's websites, as interest rates do change and offerings do change. Sign up at the link below if you have not already, or go to join.cufflink.com/financial-thing. You know Cufflink. Everybody who watches this stream probably knows, but if you don't, go check them out. Thank you to Cufflink for sponsoring the stream, the Financial Thing website. Quick hello from Holly, the official hound of the Financial Thing live stream. Hit that thumbs up button too if you can. It helps out the stream a lot. Welcome to Patty from Denmark. You seem to have moved from France to Denmark. Interesting. Colin in the Peak District, Mike in Southampton, Dave Dawson in a very cool Staffordshire. I wish it was cool here right now. So hot. Paul New in Stockport. Paul Bagworth, PB in Kenilworth. Chimpo Naughty drizzling in Cambridge. Peter Vince from Leatherhead. Annabelle Nyron from the land of both the top two restaurants in the world. That is Spain, I believe, right? George Batchelor, good evening from cold and wet Bridlington. So hello to you guys and hello to everybody else who's watching. Let's get right into it. And if there's anything that I missed that you have heard about that's interesting, put it in the chat because I don't hear about everything. It's impossible to hear about everything. But let's get into it. Look at this. It is the LoanPad dashboard that I love just checking this out once a week. Shows interesting facts about what's going on at LoanPad, one of the peer-to-peer lending companies that I think is doing a great job right now. Total loan value, $172.6 million. Doesn't seem to have moved that much. I think since the last time I checked, these numbers look relatively the same. Loan to value, an important one right here, 41%. Total security value for $217.2 million. We have 221 live loans, an average loan size of 406,704 pounds. Total number of lenders still really around the same, 5455. And very interesting that nothing in the interest coverage fund is being used, which is a good thing. Estimated time to sell less than 1 day, time to invest less than 1 day, and 684 loans since inception with 463 paid back. So really attractive numbers. I'm disappointed that it is now June 13th that we have not seen that LoanPad minimum investment come down from £10 to the promised lower amount. I figured it would have happened by now, so I hope to really see that soon. That would be nice to remove a little bit of that cash drag. I mean, it's not really that much of a big deal, but for people that have smaller amounts of money, tends to be a little more of an issue, but not really a huge issue. As you can see here, the average lender amount here is 16,941. So it really wouldn't take you that much time to accumulate £10 since it's paying daily interest, but it would still be nice for that to be reduced down to actually absolutely nothing would be the best case, but I would imagine down to maybe £1 to save some of the resources. But we'll see. Hopefully that will happen soon enough. A little bit of European peer-to-peer lending information. For all of you people who are watching in Europe and who invest in places like Bondora and Mintos and Twino and all the other ones, Estonian loan originations boost Bondora's May performance. So Bondora has reported 17.9 million euros, that's 15.1 million pounds worth of loan originations in May. That is up 17.1% compared to April. The Estonian credit market has stood out, having grown by 41.4% from April. That's a pretty big jump. And then Finland has its highest origination amount for 2024, totaling 11.1 million euros. We also have Latvia that grew a little bit from 74,000 to 137,000. And Bondora investors added 13 million euros to their Go and Grow accounts in May, which is a 23.8% decline from the total investment figure in April, which was 17.097 million euros. There were 2,166 new investors in May, which is the highest amount of new investors since January. And investors have earned 2.3 million euros in returns on their investment in May. So for people out there that are thinking that peer-to-peer lending is dormant or not growing, there you go. There's proof right there that in Europe, peer-to-peer lending is really kind of being embraced, and there's still quite a lot of money that is coming into the markets like Bondora, which is more of an aggregate anyways, but still good. Really interesting article on the Alternative Credit Investor. Thank you to them for posting this, but it's entitled, Who Should Be Liable for Investor Losses at FCA Authorized Firms? Now, just a quick note, to people that may be new to this world of peer-to-peer lending, that any of your loan investments through peer-to-peer lending are not protected by the Financial Conduct FCA or FCA Authority, or the FSCS, which is the Financial Services Compensation Scheme, which protects savings accounts. It's still one of the more frequent questions that I get asked about peer-to-peer lending from people that have never invested in it is it protected at all by FSCS? And the answer is, for the most part, well, money that you might have in a bank account sitting in the peer-to-peer lending company might be protected, but anything that's invested in an actual loan is not. And it's a piece of information that is really, really important that a lot of people don't really understand, not only about peer-to-peer lending, but in other forms of investing, including stocks, which is crazy to me, this level of information that exists out there nowadays, that people still don't understand that. Back to the article, though, there is an office called the Financial Regulators Complaints Commission, FRCC, that has twice recently found the notion, right, that the FCA should be able to limit and cap its own liability. And the FRCC has twice recently found such a notion to be unlawful, which I completely agree with. If the FCA makes a mistake, there should be no cap on the amount of compensation that investors can receive back under those terms. The FCA liability for uncompensated losses of investors in situations of regulatory failure was avoided for the London Capital and Finance, that's LC&F, and the Premier FX, which some of you might not have heard of. So a lot of the times the FCA does not take responsibility for the failures of its own decision making, and then of course the FSCS is not always going to protect, and usually not protect, losses at failed FCA regulated firms. The FCA supervises 45,000 financial service companies. Imagine, get your head around that. 45,000, this is just in the UK for people who are watching in other countries, but 45,000 financial service companies that are supervised by the FCA. Now, if you can imagine one office that I don't think is staffed very heavily, but imagine one office, the FCA, supervising that many companies. You need a pretty big staff to oversee that many companies for mistakes not to happen. So it's inevitable that, like the collateral situation, which also is discussed in this article, the mistakes are going to happen, albeit that was a really big mistake that should never happen. 45,000 financial service companies are overseen by the FCA, supervised. It's perhaps inevitable that some of these firms will be bad apples or unlucky. Some firms will fail, and investors can end up with losses. Again, very important piece of information everybody needs to understand. And those of you who have been invested in peer-to-peer companies that have failed and other companies that have failed will understand that, because you're going to see some losses. The Financial Services Compensation Scheme, funded by industry levies, protects retail investors for up to £85,000 or greater amounts for temporary balances. This framework gives confidence to ordinary investors and a safety net to those who lose out. Separately, the FRCC oversees a complaint scheme against regulators and can make recommendation for financial awards against the FCA. There have been numerous recent cases, including the London Capital and Financial, Premier FX, Lending and Collateral, where FCA-regulated firms have failed, but the FSCS has determined that the claims fell outside its protective scope. Many people have lost their life savings, sadly, with catastrophic outcomes, including several suicides. That's really sad to hear. You should never harm yourself over money, but people do. These uncompensated losses fall into two main categories: payment services and unregulated investments. In every one of these cases, the firms were regulated and supervised by the FCA, or appeared so to be. They were listed as such on the FCA's register. The public seemed to assume that this meant FSCS protection applied and that an assurance arose from FCA supervision. So another case there of lack of education when it comes to the FCA, and the difference between the FCA and the FSCS, which could get confusing to people who are relatively experienced in the investment world. Two completely separate things. One provides protection, the other provides limited supervision and possible protection, but likely not. Payment services firms often handle large cash balances in a manner akin to banks. Some users of Premier FX, a failed payment firm, lost the proceeds from the sale of their homes when it collapsed in 2019. So imagine that you were ready to buy a home and you go ahead and deposit your money into Premier FX, which is a payments firm. Then they failed and took the money with them. That's not a good situation. The FSCS does not apply to failures of such firms, probably due to an oversight when the EU's payment services regulation was implemented within the UK. The FSCS funds available, the FCA required Barclays Bank, with FSCS funds available, the FCA required Barclays Bank, a service provider to Premier FX, to cover most of the £10 million of the uncompensated investor losses in that case. Another regulator, the Prudential Regulatory Authority, has recently closed this loophole in part to protect payment services users from bank insolvencies. That's good. However, this does not address all failures of payment firms themselves. In London Capital and Financial, £237 million of ISA-eligible non-transferable bonds were sold to retail investors through price comparison websites and other mainstream channels by an FCA-regulated firm. These investments were later held by the FCA to be a permissible class of unregulated investment, meaning that the FSCS did not apply. Ultimately, a taxpayer-backed scheme was established covering 80% of what the FSCS would have paid out. In both Premier FX and LC&F, investors were not paid out in full. The FCA was found to have failed to supervise these firms properly. The FRCC recommended an additional award from the FCA, and get this, the FCA refused to pay it. So just because the FRCC recommends something doesn't mean the FCA is going to abide by that. The current situation where investor losses are often deemed for technical reasons to fall outside the FSCS protection, potentially creating significant liabilities for the FCA. Remember that the FCA doesn't have an unlimited amount of money to be able to pay out. And the FCA then purports to shake off liability in a way that the FRCC has decided is unlawful and unsustainable. This cannot be what Parliament intended when establishing these various mechanisms and entities. With this backdrop, the FCA will continue likely to face disgruntled investors who place their money with FCA-regulated firms if losses continue to fall outside the FSCS scheme. The FCA has found itself in a difficult position as regards its own liability when loopholes from the FSCS regime arose. Although the FCA's position on its own liability to investors is untenable and potentially unlawful, a better resolution to these issues may lie instead in FSCS reform. So again, just a warning out there, if you are investing, just remember that businesses do fail. This happens all the time, and that some of your funds are probably not going to be protected if you're looking for the FCA to bail you out. Doubtful that that's going to happen. Just something to be aware of. Be very careful. Be aware. Read the terms and conditions and understand what you're investing in. Twino, another European piece of news. Twino's property business reports a profit, although it's a very, very small one. Twino's property business has reported a net profit of €67,973 for 2023 after just a few months of operations. They basically launched a real estate securities business in August last year of 2023, which allows investors to fund short-term rental properties in Riga, Latvia. By the end of the year, €655,444 have been raised in funding to acquire 3 apartments. The total value of the properties was €702,147. This kind of stuff really concerns me because Twino's business is not that. And every time we've seen a peer-to-peer lending company dip its toe into this type of business, it has not ended well. And judging by the very small amount of profit that Twino has generated by doing this, even though it's only a few months after. 68,000 euros for them is really small. It just goes to show me that that kind of side business, I will call it a side business because Twino is property lending through peer-to-peer. That kind of side business is very, very risky and probably won't end well for them. We've seen every company in the UK that tried to dip into this type of investing, like House Crowd, Property Moose, were the two that really stand out that did not make it work. Maybe Twino can. I don't know. We'll see. I mean, sure they could, but the odds are kind of stacked against them. Also, short-term rentals are very, very difficult to manage. You have a lot of people coming in and out of those properties, creating a lot of management headaches, a lot of wear and tear on the properties. You end up spending way more than you originally think you're going to spend on maintenance, keeping the properties looking nice and new. Because all it takes is a couple of bad reviews on a site like Airbnb, and your short-term rental is absolutely sunk. So, if you're in Europe and looking at something like this, I would, me personally, would not touch it with your money. But at least they're making a profit and not a loss. I guess that's a good thing. And finally, from the alternative credit investor, RoboCash forecasts 23% rise in net worth of European investors. A lot of Europe news today. They expect around a 23% increase in the average amount of assets held by European households in the next 5 years. Currently, European households have assets and liabilities worth around £46,000, which RoboCash expects to rise by 12,000 euros by 2030. What's interesting here in this article is while allocation to long-term bonds fell 11%, other investment options, including alternative investments like peer-to-peer lending and cryptocurrency, grew 331%. There is a lot of money that is going into places like peer-to-peer lending and cryptocurrency, also stocks and shares too. There's a lot of money too sitting on the sidelines, which I think people, including myself, have been waiting for a while to see a stock market correction, which, gosh, I mean, the markets just seem to be propping themselves up and up and up. We'll see if that happens. I don't know if it will. But obviously there's a lot of money going into these alternative investments, not only in Europe, but also in the UK and the US. Not surprising, I would say. Also, this week, I was asked a question about if I had to pick one peer-to-peer lending platform right now. Somebody had mentioned that I haven't updated the top 5 peer-to-peer lending lists in a while, which I will do in the next couple of days. But if I had to pick one, it's a really tricky question because it depends on what risk tolerance is. And right now, I kind of had this low to mid risk tolerance, so I wasn't able to necessarily give one answer to that. But I think there's a lot of companies that are showing that they can provide stability for longer periods of time, which I think is important. So my answer to that question is, it is the peer-to-peer lending platform that I don't really hear too much about, that just kind of runs slow and steady in the background. It's like an app on your phone that's running, but you don't really see it running. It runs, everything appears to be going the way that it should be. You get interest payments made regularly. You don't really have to follow up too much. So I think when I put out the new list in the next few days, I don't know that I necessarily have a favor. I know that there's some that I think are performing really well. There's other ones I'm a little more concerned about just because of things like defaults and waiting, just keeping an eye out and seeing how those defaults are really handled. I think Cufflink is doing a really good job of handling defaults too, by the way. But yeah, I think a favorite is quite difficult to pick out, but everything depends on risk tiers, right? You got your higher risk and your lower risk. And it would be easy to say, well, I like the lower risk more because it's less risky and it seems to be more stable. But you're not going to get the returns from the lower risk that you are from the mid tier to maybe mid to high risk properties. So I pretty much like the same platforms that I've talked about for years on the stream. Just run through them very quickly. Again, not financial advice, just what my opinion is. Not forced to be right or wrong. LoanPad, Blend Network, PropLend, which I don't invest through either one of those two just because of finances. Unbolted, Cufflink. Keeping an eye on crowd property, make sure those defaults are handled appropriately. Folk to Folk, CrowdStacker. And then there's a couple of other ones too. There's ones that I've been emailed about recently that have some questions about them. I think Brick Owner is one of them right now. So always keeping an eye out on everything that is happening in those kind of range of peer-to-peer lending companies, because you never know at the end of the day. We have no guarantees, but I think the ones that I have mentioned seem to be Assets Exchange too, just seem to be running along okay, and some of them have some things that they need to work on and improve for sure. So I'm not going to call out a favorite right now, but that's my kind of range of companies that I've also heard of. Elfin Marketplace. I've heard very positive things about Shojin. Also heard about a loan with Shojin that's kind of having some trouble right now. So there's that. Easy Money. So there is a lot of options out there. Those options are not really growing. But and if there's any that I missed, apologies to you out there. But my brain is small sometimes. It doesn't remember all of them. Yeah, so lots of different options anyways. Let's see. Oh, thank you to Peter Vince for sending this through. I totally didn't see this, but Trading 212, which, as you know, I use myself, has added a cash ISA, which happened in, I think, May 21st, about 23 days ago. So you can now get, if you choose to do this, and it is FSCS protected, which goes on everything we've talked about today, 5.2% as of now. Interest paid daily, flexible withdrawal anytime, completely free, no account fee. So if you're looking to park some money somewhere, you can actually do that at Trading 212. Where do you find that? Well, I think, let's see here. Where is it? That's the question. Right here. If you go on the website and you click on those three little lines up on the top right, you can see right here now you can invest in regular stocks and shares. You got your CFD, your stocks ISA, and now if you want to open a cash ISA, you can do that by simply clicking on that. Since we are inside Trading 212, let's take a look at the portfolio and see how we're doing. We've hit a new all-time high, which has been really good. 22,303 pounds. That was close to 23,500 yesterday. We had a bit of a downturn in the markets. But next step, 23,000. So while the portfolio was kind of murmuring along at 18 to 19,000 for a while, we had some pretty good hits with a couple of the stocks. Creative Realities has taken a nice bump recently. If you look up here, we were down at just $3.20 at the last day of May, and now we've hit $4.79. I do have a sell order here. I mean, I've got 2,200 pounds worth, so not a massive amount, but I put in a sell order for $5 to liquidate half the position. My goal had been to kind of buy back in the $3 range, but this stock has just seemed to have been going on an upward trajectory. So right now we're 32.5% in the green, which is really nice because that wasn't the case a while ago, because we averaged $3.50 buy point. So that's made a really big jump in a very small amount of time. And this is important to know when you're buying and holding, that these stocks can move. These volatile stocks can move quite quickly in a short period of time. Coinbase too, having a pretty nice month here, up 22%, which is crazy. I mean, you think about a stock moving that much in 1 month. That's a good thing and a bad thing, because it can also go against you the other way. But you can see down here it was $199 on the 16th of May. So a month later, this stock has gone up about $45. So we're up 54% on that one, hanging in there. NVIDIA, this split 10 for 1. So we're now, instead of having 5 NVIDIA shares, we got 50. And this stock just keeps on growing and growing, which is crazy. Probably unsustainable, but yeah, AI seems to be roaring ahead. So up 37.2% on that. Rivian has made a bit of a bounce back. We're still 25% in the red. And then Valka Energy now 40.77% in the green. So the portfolio's doing really well, which is good, because that means more donations to charity that we can send from the profits of this when those positions get liquidated. What's the plan from here on out? I don't know. I'm just really keeping an eye out on the market, and I'll talk about what's going on in the economy and why I think these stocks will continue to do well during this U.S. election year, which is crazy. We had a U.S. CPI inflation report come out, and basically unchanged, about 3%, right? I think it was 3.3%. You can see here in May, the CPI index for the U.S. for all urban consumers was unchanged, rose 3.3% over the last 12 months, not seasonally adjusted. And a lot of people will say, oh, this is great news. But really, number one, these numbers are not really accurate. This is not the true inflation rate. I think it's much higher than that. But the U.S. government likes to put forward a rosy picture to keep these stock markets inflated high. But it still means that the price of everything's gone up 3.3% from the same time last year. We had a good week on the stock market. You can see here on the 11th of June was when there was some good economic news and the inflation didn't go upwards, so people were happy about that. And we see the S&P 500 took this big uptick. So yeah, it was a good week for that. The Federal Reserve sees some progress on inflation, but envisions just one rate cut this year. I mean, this is very different to what we've been told over the last 6 months, where there was supposedly in the U.S. was going to be about 3 rate cuts in 2024. Here is a article that was put out March the 21st, this is crazy. Morningstar, of course, says that we think there'll be 5 interest rates cuts in 2024. I just can't see that even being a possibility now. At this point, there was even a letter that was sent to the U.S. Senate. And why do you care about this? Because I keep saying this. Everything that happens in the U.S. flows into the stock market, which then affects world stock markets, especially in the UK. And a lot of you are invested in, businesses that operate in the US, and also things like index trackers that track the S&P 500 and the Dow Jones and the NASDAQ. So this, of course, makes a lot of impact to your investments and what's happening in your portfolios. You can see a letter here that was sent on June 10th, basically begging Jerome Powell to cut interest rates. I can't remember who wrote this. It was like a couple of senators, I think. So we write today to urge the Federal Reserve to cut the federal funds rate from its current 2-decade high of 5.5%. The sustained period of high interest rates is already slowing the economy and is failing to address the remaining key drivers of inflation. Furthermore, the European Central Bank, which like the Fed, has a mandate to steer inflation towards 2%. That's not happening anymore. That's unrealistic. ECB cut interest rates for the first time in 5 years. It's time for the Fed to do the same. Will that happen or not? I don't know. I think that the U.S. has to do it at some point, but it's going to be a really small cut. You can see here on the Fed website, which is I think it's the St. Louis Fed that puts out this information. You see here, this is the Consumer Price Index, CPI, inflation, less food and energy, which are two really important things. You see this inflation rate peaked here in December 2022 at 6.5% and is now starting to drop, but still definitely a problem. That is the Federal Reserve Bank of Atlanta that provides that information. This is the CPI for all urban consumers in every U.S. city on average. This has grown from here 23% all the way now 313% higher. So this is the price index. That's the U.S. Bureau of Labor and Statistics. That's not a good sign for the way that things are just getting way more expensive for people, and the salaries are not keeping up. You can see here in the U.S., and we'll talk about the U.K. too, but this is the real medium household income in the U.S. So since 1984, it's 56,000. Now, at the peak in 2019, it was 78,000. Now it's down to about 74. So it's gone up about 20,000, but it's, how long is that? 40 years it's taken for that to increase. What is that? 40%. So the inflation rates are far outrunning these salary rates, which is why, by the way, I have always said you got to find a place to put your money. You don't want your money sat in fiat assets like the pound or the US dollar, because inflation is completely eating away everything that is going on with your dollars or pounds. So everything is becoming more expensive. Hence why I like Bitcoin. Again, not financial advice. Putting your money into something that has a decent shot of appreciating in value rather than leaving it in something that is just getting eroded. You can't argue with that either. There's no arguing saying that fiat currencies, leaving your money in a bank account, is a good idea. Yes, it's safe, so we're led to believe, but it's not increasing. It's just eroding and deflating. As you know, I always like to find interesting things on the web. Look, this is a funny meme. Financial advisor, no more than 5% net worth in crypto. This guy saying me, 99% in on Bitcoin. Yeah, that's a funny one. We had interesting news this week. There was some reports out in news saying that this Saudi Arabia's 50-year-old petrodollar agreement with the U.S. had expired, and no new agreement in place. Saudi Arabia will now sell oil in multiple currencies, including the Chinese RMB, euros, yen, and won, instead of exclusively in U.S. dollars. Now, correct me if I'm wrong, but I'm pretty much sure that Saudi Arabia has always accepted multiple currencies for its oil, and that if the Chinese wanted to buy oil, they certainly weren't paying in U.S. dollars, that they were paying in yuan anyways. So there are other people that have been saying that this agreement never existed, saying this petrodollar pact is a fake headline. There was no such agreement between the U.S. and Saudi Arabia. I found this article on the New York Times from the 1974 on June 9th saying that the pact is signed by the U.S. and Saudi Arabia. So who knows who's right or who's wrong. I'm just going off of what I read. I don't think this necessarily really affects. I think that the FX exchange rates would have gone crazy if that was actually true, that Saudi Arabia was no longer going to use US dollars. I think they will continue to do that because the US dollar is very widely used for global currencies. You can see here in the global currency market and trade finance too, US dollar is 84.1% of all transactions versus 5.94% in euros. So it's highly liquid. It's a highly liquid currency. And I think that these oil people will do what makes sense for them monetarily. They're not doing anything to cut off their own noses to spite their faces. But there's a lot of misinformation out there about that. But there are reports that there is a shift away from the US dollar that's happening in real time, and investors must be ready. The US dollar's dominance is in decline as Russia and Saudi Arabia either Chinese yuan for oil trades. Like I said, they've always been using the yuan. Investors may need to begin to revise their long-term investment strategies. And then we see a piece of news that comes out today. Again, there was some misinformation about that, but people were saying it was Russia that decided to halt dollar and euro trading on their Moscow stock exchange. But from what I understand, it was because of U.S. sanctions that this happened. So sanctions end dollar and euro trading on the biggest bourse. I'm not really sure what that is. U.S. says it's targeting financing of war economy. Some banks immediately jack up the price of buying dollars. This is a very, very interesting thing, but the U.S. trying to put pressure on Mr. Putin to end this ridiculous war he has gotten himself into. Moving on. Like I said, it's Elder Abuse Awareness Day, and this is something a U.S. stock company sent out to people that have accounts on Charles Schwab. It's saying that June 15th is an important day, Elder Abuse Awareness Day. It's a day for communities worldwide to unite in bringing attention to the challenges and difficulties faced by elders and our collective responsibility to protect and support them. At Schwab, we're dedicated to shedding light on the often unseen and unspoken issue of elder abuse, which includes physical, emotional, and financial mistreatment of older adults. Financial abuse of seniors is a particularly concerning aspect of elder abuse, involving the unauthorized or improper use of an older person's funds, property, or resources. Now, my late mother was scammed. You have to be very careful now. There's a lot of stuff going on. I'm going to show you an example of just a few of the texts that I received. And I get these texts all the time. I probably get one or two a week now at this point. But you can see here, this is a text that looks like it's supposed to be coming from Coinbase. Yes, to learn from top industry experts about how you can aim for 5,000 to 15,000 US dollars daily. Obviously a scam. I get this one text that says, "Long time no see, let's have lunch together tomorrow if you have time." I know these scammers, so I tend to play around with them a little bit. So I asked, "Are you paying? If so, I'm in." "Of course. Are you free tomorrow?" I say, "Yes, but I'm not fitting to go to McDonald's for real." "I know you never eat McDonald's. How about going to eat Chinese food?" And this is a scammer, and I'll tell you where these people are based. And here's another one on the right, just says, "Hi, are you okay?" And I reply, "Yes, I'm good." So the problem is if an elderly person were to get a text like this, or even an email that looked like it was coming from, say, their bank, it would be very easy for them to mistakenly click on one of those bank account email links and putting in their login information without thinking to know that that was a fake website that looks exactly like the website of their bank, because they've just copied the code. The scammers can copy the website code, and once you input your login information into their fake website, they have your login information, and now it could be possible for them to go in and drain those funds out of the bank account. And there is questions to whether even that is covered, because sometimes people do things that on their own accord, the funds get stolen, but sometimes the banks won't even cover it because they'll say, "Well, you inputted your information into a fake bank account, and that's on you, because the banks are never there. Even though the money's supposed to be protected, it can be a real headache and a fight to get them to protect your money and give it back to you if you got scammed. I know this from people that have had this happen to them. So I just wanted to show you where these scammers are originating from, because I had a conversation with a scammer myself. I hope you're going to be able to see this, but he sent me a video. This is a person that scammed me, or tried to scam me. He didn't scam me. I've not been scammed by one of these people. But I said to him, look, I know you're a scammer. Just stop the act and tell me about why you do this. And we got into a conversation. He sent me this video of where he lives. And this is in Myanmar, in a building that he lives in. I was trying to get him to let me pinpoint exactly where he was, and I was surprised he gave me this information, actually. But that's a video you can see of actually him and where he's being supposedly held. Here's a picture of the room where he lives in the corridor. And what these guys are doing is, a lot of them have been human trafficked. They've gone to apply for a job. They usually come from quite a far away distance, and they apply for jobs that they see that are listed in maybe their local newspapers, or even are just emailed. And it says, come for an IT job, we're hiring. They apply for a fake job, and then they fly them in or bust them in. And then once they're there, they say, oh, I'm sorry, that job's not available. You're going to be doing something else now, and you can't leave until you pay back a debt. And this guy told me the way the whole system works, and it's this thing called pig butchering. And so unfortunately, a lot of elderly people do fall for the pig butchering scam. It is particularly bad. This happened to a family member of mine who, I said, has lost 6 figures to a scam like this. It can come in many different forms. And basically, pig butchering is where they get a little bit from you at the beginning, but the entire goal is to just butcher the pig and take everything they can. There is a list here of the potential scams that a lot of adults are falling for these days. Government impersonation scams, so they could get a letter could be from HMRC, saying you need to call this number. Can look just like an HMRC letter, and when somebody calls, they think they're speaking to an HMRC representative, but it's not. You got sweepstake and lottery scams and robocalls and phone scams. This is the one that I showed you with the text messages. So basically, these people are just in big call centers, and usually in northern Thailand or Myanmar. Robocalls, I get them all the time. And then we got computer tech support scams. This is the one my mother fell for. Thankfully, it wasn't too much money. It was about £150, which she lost due to a computer tech support scam call. And then the grandparent scam. This can be where somebody creates a Facebook account that they just basically steal a photo from a family member. They could take one of your relatives' pictures and put it on the Facebook account. Say, oh, I've just started a new account. I lost access to my old one. And then people start engaging with these Facebook accounts thinking it's one of their family members. It's not. It's an actual scammer. And eventually that ends up, they end up losing money. And then we have the romance scam, which is one of the nasty ones out there. It says reported losses reaching $1.3 billion in 2022. That's crazy to me, but they go after vulnerable people, usually people that are older, been divorced, or very vulnerable and lonely. And then there's a bunch of other scams. But the gentleman that I spoke to, who actually says he's being held, this is the location of where this scam center is, because he sent me the map point. You can see here it's Thailand here, so it's right on the border of Myanmar, or used to be Burma. And these places are set up by Chinese people. They come over and build these facilities. You can see right here. You see the building, right? Looks like very much like the video that he sent to me. You can see the way that the building looks. And unfortunately, these places are, you can't escape them. You can't just leave. And they charge the people that work in these scamming call centers money to do everything from eating. They have to pay rent. And they cannot leave until they've paid off their debt. It's all security fenced. They have actually armed security. And sometimes it's easy to blame the scammers itself, but sometimes the scammers who are doing the scamming have actually been scammed and gotten themselves stuck in situations that they actually can't escape from. So it's very, very sad, but just be aware and be vigilant to tell any elderly family members that you have if they get any scam emails or letters that don't look real. Be careful. Stay vigilant, because it is very easy to unfortunately get scammed. And I've had some really in-depth conversations with this guy. He's a very young guy in Myanmar, and I do feel a little bit sorry for him, but he's told me exactly how the systems work and how you basically they're making phone calls all night to people in the UK and the US, and usually a lot of it's romance scamming, and they're communicating and texting with people who believe they're speaking to somebody else. It's just a group, and then I think that he told me there's about 200 people at work in his one call center. So since it is Elderly Awareness Day on June 15th, I thought I would just sort of a public service announcement, because it is a topic that's dear to my heart. I've had this family member that thankfully is out of it now, but for a couple of years was so deeply involved in this scam that I could not make that person see sense. It was very, very sad, and they really truly believed that this was not a scam, and it 100% was. Let's see what else. Get a couple of mailbag letters. This one is a good one. Let me show you this. Hi Lawrence, I'll get straight to the point. I like that. What do you use for deodorant? I've been taking health seriously in 2024, and I want to stop putting chemicals into my body. Thanks, Trayvon in Barrie. Thank you, Trayvon. Yes, I've spoken about this before. I don't use regular types of deodorant. I haven't for years, because the aluminium, or as they say in the US, aluminum, that is used to block your skin pores under your armpits is, the pits are designed to sweat. Sweat releases toxins. When you use standard deodorants, it clogs up your pores, stops you from sweating, yes, but also keeps all the bad stuff in. So what do I use? Simple solution. Found about this years and years and years ago. Milk of magnesia. You know the stuff you drink when you have an upset stomach? You can get it from Boots. You can use this, and I've been using this for years, as a deodorant. It's pretty good. Now, let me show you what it looks like. This is it here. It's Philips Milk and Magnesia. You can get other brands of it too. So this is when you have upset stomach and indigestion. This is what you drink. But what I do is put it into a spray bottle and just put some under my armpits, 3 or 4 sprays every day. And I found it to be a very natural, it's magnesium hydroxide, so it's a very natural product. It will not stop you from sweating if you're a heavy sweater. Unfortunately, you're supposed to sweat, the body's supposed to sweat and let out those toxins, but you will not have a stinky pit. So Trayvon and Barrie, that's what I use myself. Again, you can get it at Boots. It's relatively inexpensive. That's what I use for a deodorant. What else we got? A lot today. 6 minutes. I'm going to try to squeeze it all in 6 minutes. The Wisconsin Pension Fund now includes Bitcoin. I was a bit surprised by this one, but the state of Wisconsin in the U.S. purchased more than 160 million U.S. dollars in shares of Bitcoin ETF funds between January and April. 160 million pounds of Bitcoin ETFs gone into the Wisconsin Pension Fund, a very, very conservative pension fund. That should be a little bit of a insight into what is coming next. That's probably a lot of pension funds going into this as a diversification play. Now, this pension fund is about $160 billion, so this only, I believe, is about 1%. It's a relatively small investment, but still an important investment for them. I wanted to look at what they actually held in their fund. They have a lot of treasury bills, which is why I thought it was interesting that they delved into that, because nearly all of it is treasury bills. You can see there's Australian and Canadian treasury bills, all these treasury bills inside their portfolio. But then here you have commercial paper, which is Amazon, Apple, Canadian Imperial Bank, Nestle Finance, and Walmart stores, which is actually quite risky. So basically they're lending money to these major companies. They don't really go into what type of stocks they hold in their portfolio on this document, but it's interesting to see that they put 160 million into a Bitcoin ETF. We have Michael Saylor of MicroStrategy, who is offering up $500 million of convertible senior notes from his company that he's going to use to buy another $500 million of Bitcoin. So this guy continues to accumulate more and more Bitcoin. Speaking of diversification, this guy posts on Twitter, "I'm prepared to lose everything over Bitcoin. Everything I have is riding on this one trade. If Bitcoin fails, I will be absolutely wrecked. It will take years to recover. I told myself a long time ago I'd rather lose everything than miss out on the most asymmetric opportunity in my lifetime. I bought the top in 2021 and the bottom in 22. I'm still buying now. I'm more allocated as a percentage of my portfolio to Bitcoin than I have been before. This may seem irresponsible as fudge, but when you see the world through the Bitcoin lens, it makes more sense. It's perfect math. I don't know how many fully long degenerate Bitcoin hodlers are out there riding this colossal Bitcoin wave with me, but you're all effing legends in my book." While I can appreciate that post, being a Bitcoin fan myself, I would say that that might be a little bit irresponsible. You can see here in a comment, this guy says, "Dude, I turned 60 this year. Other than my house, I'm 90% Bitcoin, and there's no recovery plan for me." Those people will be happy until things turn against them, because Bitcoin has known to have gone very negative at times, and whether you can sleep at night with that type of allocation is probably not recommended. So be aware. Joe Biden's campaign is in talks to accept cryptocurrency donations through Coinbase Commerce, which is really funny because this guy posted, "Biden's SEC is suing Coinbase in federal court, arguing it doesn't have a right to exist as an exchange." At the same time, the Biden campaign is preparing to accept crypto donations via Coinbase. This is why the U.S. government absolutely makes no sense. You can see here, this is the SEC lawsuit that was posted in June 6th of 2023. Brazil's largest bank expands crypto trading to platform users, so they're going to make Bitcoin and Ethereum trading available on its investment platform. That is kind of a big deal. However, people will not be able to withdraw those cryptocurrencies into their own private wallets, but it's still a big opening into Brazil for cryptocurrency. Here we go. There's another letter from the mailbag. "Lawrence, I hope you're well. Great job on the videos. I always watch the catch up. Sometimes you talk about Bitcoin on your streams. It is something I've been researching, and I'm ready to depoto into the water." I think that's supposed to be dip into the water. The question is, am I too late? The price seems unreasonably high for what it is, but I also don't want to overweight. Would you be able to discuss this on the stream? Thanks. Lucy, it's always a funny thing to know when the right time to go in. I don't ever think you're too late. Do your research. If you believe in the fundamentals, it's really never too late. As long as your money is sitting in pounds, you're in a losing position. But I think diversification, don't do what that guy did who's got 90% of all his worth into Bitcoin. Make sure that you know what you're getting into. But no, I don't think it's too late. You can see the inflows here of Bitcoin ETFs through worldwide continue to be really strong. We got 61.8 billion just in the US alone in Bitcoin ETFs. And just think about that was just from January of 2024. So 61.8 billion now, 72.2 billion worldwide. That is global amount, so coming up to 100 billion US. I don't think it's ever too late. You could say the same about the stock market, right? People believe that it's too late to get into the stock market right now because it is an all-time high. But if you zoom out, you'll see that there's just different points in history where everybody thought it was too high. Here in 2000, right, when we saw the declines, people were saying the same thing. Here, at this point in July of 1998, same things, too high here, too high here. And what we've seen is that if you can just be patient, most people don't tend to buy in at the absolute worst time when things drop. But if you can hang in and hold for a decent period of time, if you have a minimum of 5 years, you should be fine. And you're going to see these ups and downs just like in the stock market. Same is the case for Bitcoin. You can see here that if we zoom out, you're going to have times where you get these spikes, fall downs, and ups and downs. But generally everybody that purchased even from the high point here, if they'd have just held on, even when things crashed, they'd be okay right now. It took some time. It took 3 years, but they're okay. So do I think it's a good time? You know, look, there's no guarantees in anything, whether you're investing in index trackers or Bitcoin, even peer-to-peer lending. There's absolutely zero guarantee of any of this working out, but historically it's shown people that buy and hold things, investments, are the ones that actually do make out well in the end. I think this is no different. If you look at the Vanguard, this is one of the most popular S&P 500 ETFs in the USA right now. You look at the performance of that over the years, and it's been up and down, but on a general high trajectory. And if you, look at these share assets, share class total assets of 425 billion now, median market cap 212 billion. I don't know exactly how much is in this fund, but I know it's a lot. I haven't been able to actually find that number on their website, but it's a several multi-billion US dollar fund. And if you actually compare that to how much, let's see what the portfolio composition is like. 212 billion market cap. Here we go. Fund total net assets of April 30th. So there's 1.1 trillion US dollars in this S&P 500 Vanguard ETF. And if you consider it to the inflows that have come into Bitcoin in just since January of 2024. So this VOO fund has been around for, I think, 13 or 14 years. It's taken to get to 1.1 trillion. And you can imagine the ETF amounts here into the Bitcoin are now closing in on 62 billion. So imagine what another 3 to 5 years that number is going to look like. And if money just continue to come into the ETF, which it is happening every month, more and more is getting put in, that should push up the price of Bitcoin in the long run. And other economic factors that are happening in the US and in all first world countries, inflation problems, more money printing, more debt will push, I think, a product like this higher and higher. So is it too late? I don't think it's too late. I think always the right answer is if you put in a cost average in a little bit at a time, every month or every week, over a period of time, I think you'd be fine. You'll hit the highs and lows, hopefully, the ups and downs, the troughs and the valleys. But there is absolutely no guarantee. But I do know something that's very interesting. There's a lot of money sitting on the sidelines right now. I think, let's see, where was the graph? There was, I believe, $6 trillion in the US just alone sitting in savings accounts, which, let's see if I can find the graph. Bear with me a second. Come on, Mr. Graph. Here we go. This is a graph that shows total money market funds in the US. So this is 6.4 trillion US dollars. And you can see that right now, since 2020, that's climbed 1.3 trillion. So once these interest rates do start to get cut, I think you're going to see some of that. I mean, probably not half of it, maybe even 15% of that goes into not only ETFs into the stock market, but also alternative investment products. You'll see those prices really start to continue to go upwards. So yeah, this money has to go somewhere. 6.4 trillion is not going to be happy getting 2.5 or 3% interest. Right now it's happy getting 5%, but it won't be happy getting 2.5 or 3%. So I don't think it's too late. I think there's plenty of time. You just have to be really knowledgeable about what you're buying and hold and have conviction, and hopefully it'll all work out. But again, time will tell. I think that's going to do it. Oh, there's one other video I wanted to show you. This came out today. It was pretty sad. This is the U.S. president. I'm going to mute the music, but he was at a concert that was put on at the White House. And he just really seems not to be quite there. That's a look of somebody, I think, who is showing signs of possible dementia. And this is why I invest in something like Bitcoin, because I don't believe that the governments of this world are doing the right thing. I mean, by not to get too political, but by putting somebody into the White House who just appears like he might not be all there is kind of a scary thing. Like, you have millions of people, right? You could pick a candidate that was more aware, was a little younger, a little bit more in touch, and yet the U.S. Democrats are choosing this person to be the representative of the country, and that's kind of funny because that video gets stuck right there. But that's why I don't have much faith in the world leaders to take care of the monetary policy, because it seems like they can't even take care of putting the right people into positions of power. So just another reason why I would say diversification is a good thing. And as my dad always used to say, row your own canoe, paddle your own canoe. Don't put too much faith into these governments that are running things, and it's scary to me. I don't know. We'll see what happens. But this U.S. election is going to be very interesting because it's going to put some big movements, I think, to the U.S. and global financial markets. Could be good, could be bad. Time will tell. Anyway, I think that will do it for today. That was a lot. Again, hit the thumbs up if you liked the stream. Hit it if you didn't. You know, I hope you did. Let's take a quick look at your comments, and then I'm going to get out of here. Hello, Alan. How you doing? Did anyone watch the Alternative Credit Investor webinar today? I didn't. I forgot about it. I was supposed to. A new loan on Shojin today. Yeah, and for anybody that's looking for peer-to-peer options, there's a lot of loans out there right now that you can get into. There's a lot of availability. This is a great point, Dave. A lot of share prices driven by sentiment rather than logic. 100% agree. When everybody's feeling good about things, money goes in. Stock prices go up. When they're feeling bad, the opposite happens. Bourse, French for stock exchange. Thank you, Mike. I didn't know that. Dave Dawson says the some of the UK companies are super cheap. Deodorant talk. Nivea sensitive for men. Roll-on or aerosol spray? Oh, let's see. Nivea. Let me Google it. Sensitive. Let's see what's in it. Quality ingredients. That's good. No harsh scents. Quality ingredients. Chamomile extract. Avocado oil. What's in it? Oh, look right here. Aluminium chlorohydrate. That is what you don't want to put onto your skin. That anything with aluminium. You got to be careful. These companies, they will throw things in there to stop you from sweating. So be aware. Big difference between antiperspirant, really bad blocker, and deodorant. Smell cover-up, but best avoid both. Follow L's sound advice regarding milk of magnesia. Thank you. No, I don't think that the SEC is independent of the government. Not at all. Heavily influenced. Next week, could you look at the UK's main party manifestos and give us your take on their financial policies? Reference our actions pre and post election. 3 weeks today. Scary. Yeah, I could take a look at that. Sure. Cheers from Paddy on holiday in Denmark in his RV and his dog, Bobby. Enjoy. Have a safe trip. Paddy, enjoy yourself. That is going to do it. Thank you, everybody, again for joining. It's been an interesting stream full of lots of information. I went way over time. Apologies for that. I always seem to do that. But anyway, we'll see you next week. That is really all I have for you. Have a great weekend. I will see you next time. Cheers. And yeah, that's it.